Hello and welcome to Asking for a Trend. I'm Josh Lipton. For the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving into. It's a mixed day on Wall Street. Tuesday, we saw the S&P 500 close at a record high, while investors watch fresh trade news rolling in with President Trump saying tariff deals have been reached with Indonesia and the Philippines. And billions of dollars are on the table when it comes to the food delivery space, the newest frontier being bots and drones. We're taking a deep dive into the companies working to take a bite out of this growing sector. And players from the WNBA are calling for pay equity as collective bargaining negotiations continue. Basketball stars in the league like Caitlin Clark are taking on the fight publicly now. We're taking a deeper dive into the future of the WNBA. Well, deliveries by drones and robotics may be at an inflection point. The technology is not new, but rollout is evolving. Billions of dollars in investment are being poured into the space while competitors continue to arrive on the scene. To help us put this all into perspective, we're joined now by autonomous delivery firm Zipline's head of restaurants, Lauren Poillon. Lauren, welcome to the show. I actually want to start kind of bigger picture, Lauren, because I'm sure that a lot of viewers, when they hear about drone delivery, Lauren, it probably is a little bit about like when they hear about robo-taxis. What I mean is we've been hearing about this for a long time, Lauren. You know, a lot of hot talk, a lot of promises, a lot of investment and spend. Bring us up to speed on where this industry is now, Lauren. Are we seeing real, meaningful traction here?
Yes, thank you. Thank you so much, Josh. We absolutely are seeing real traction. Zipline has been operating for 10 years in the drone delivery space. We've flown over 100 million miles, about 1.5 million total deliveries. We got started in Rwanda about a decade ago, really in the healthcare space, and we've grown from there. What we're seeing, as you can see on the screen here, is we've grown in the US because there's retail partners and restaurant partners that see a ton of value and use case in doing deliveries, not only for healthcare, but retail and restaurant as well. So this is happening. We are live in Dallas-Fort Worth today, serving Walmart, and we're going to be turning on food delivery here in about 1 week. And we're really, really excited to partner with some great restaurant partners to make it happen.
In terms of the number of drone deliveries you're doing, Lauren, I don't know if you break this out, but do you break out publicly how many you're doing daily or weekly or monthly?
Not right now, we're not. We've done over 1.5 million deliveries in total. And what we've seen so far is customers are loving the service. We're seeing new customer behavior trends where people are ordering from our app 4 to 5 times a week to get their food delivered, which is super exciting.
You mentioned Texas. Where else in the U.S. are you making these deliveries now, Lauren?
Yeah, so we're live also in Pea Ridge, Arkansas, and then focused on Dallas-Fort Worth with plans to expand to Houston, Seattle, Atlanta, and some other areas as well.
And when you're making deliveries in these states, Lauren, are you making deliveries? Is it in urban and suburban environments? Is it in rural environments? All three?
It's all three. It's a little bit of both. We work very closely with the FAA to make sure that where we're flying is certainly safe and regulated. So right now we are a bit all over the place, from more urban environments to the rural areas of Arkansas, for example.
And what are the verticals that you're targeting? I mean, is it food, medicines?
It's the big three are healthcare and medicine, retail, where right now we're operating with Walmart, and then food is the one where we're just seeing a ton of growth. There are restaurant partners that are extremely excited for us to get this going. The big benefit with drone delivery is really speed, and there's benefits there for the restaurant partner and the consumer. We can get our aircrafts are fully autonomous. They fly themselves. There are no drivers. They don't sit in traffic. And so the big benefit for food delivery especially is we can get the product there in about 3 to 5 minutes. Our aircrafts travel about 1 minute per mile. And that is a pretty drastic difference in high traffic areas like Dallas, Fort Worth, and others, where a 3-mile drive could take up to 25 to 30 minutes. And so speed, and of course, with speed comes food quality. Nobody likes their French fries that aren't crispy or their burritos cold. And so we're really hoping to solve that problem, not only for the consumer, but also for the restaurant, because typically that feedback feeds right back into the restaurant themselves and not the delivery company.
No cold burritos. I'm with you on that, Lauren. Let me ask you, just when you think about drones kind of buzzing around suburban neighborhoods, Lauren, have there been any safety incidents involving your drones?
Not at all. There have been no safety incidents impacting a human, and we have flown over 100 million miles safely. And as you mentioned, noise is obviously something else that's been top of mind for us. We've designed a system for the last 4 years that is very quiet. You can barely hear it. What's unique about Zipline's system as well is we keep our aircraft 300 feet in the sky when it's making a delivery. The big reason being we do not want this to be a hindrance to existing communities today. We want this to fit seamlessly into day-to-day life for consumers.
You do have competition in this space, Lauren. I think about Amazon and Google. What makes you all different? What are your competitive advantages?
Yeah, absolutely. I think our big one is our two-part system, as I had just mentioned. We keep our one aircraft very high in the sky, both for safety and noise, and we lower a smaller delivery zip, we call it a delivery zip, to the ground to make the delivery safely. The food is contained in the delivery zip that you can see there. We do not require any custom packaging from a restaurant. The goal really being we want this to be super seamless to turn on restaurant partners as quickly as possible and deliver that food in a great hot experience for consumers.
And Lauren, where do you make and assemble these drones? Is it all here in the U.S.?
Yes, right now we are doing all of our manufacturing in the U.S. and California.
And talk about these drones a little bit more. I'm just curious, like, how much do they weigh, Lauren? How fast do they go? How much weight can they carry?
Yeah, so they can carry up to 8 pounds. They can fly about 10 miles out, 10 miles back, so 20 miles round trip, and they're about 60 pounds.
There was, earlier this month, Lauren, I saw the Senate did confirm Brian Bedford to lead the FAA. I'm just curious how you think through that. What could that mean for your company, for your industry?
Yeah, we've partnered closely with the FAA for over a decade, and we're excited just to continue seeing where we can go in terms of our partnership there. We're really excited to bring drone delivery to Dallas and continue expanding to other metros.
Final question, Lauren. You all have been around for a long time. I think, Lauren, correct me if I'm wrong, founded in 2014. So I'm just curious, what is the future? You look ahead here. Is it IPO, Lauren? Do you want to test the public markets? Would you be open to being acquired by some of the bigger names we just talked about, like an Amazon, a Google? What's the future?
Yeah, right now for Zipline, it's about improving the experience. It's improving the delivery experience for consumers in the restaurant and the retail space. We're focused on that and getting that right to make sure customers are happy and our restaurant partners, retail partners are happy. That's where our focus is for now, and we're excited just to see where this goes.
Lauren, thanks so much for joining the show today. Appreciate it.
Thank you.
Stick around. Much more Ask for a Trend. That's still to come. The S&P 500 ekes out a new record close amid a wave of earnings. Investors also weighing the latest trade developments. Here with more on the trading day takeaways is Yahoo Finance's Jared Blikre. Jared.
Well, thank you. We got to talk about some breakouts today, and specifically in some sectors. I'm also going to show you some industries. I like this because the markets are kind of quiet overall. We're very much in bull market mode, which means low volatility, low volume for the most part. But here are some sectors that caught my eye today. First, utilities. I've been talking about this for a few days, and let me put a year-to-date candlestick chart on here so we can see the breakout. And here we go. These last 3 days have been to record highs. Utilities doesn't really catch a lot of headlines, although within the last year, we did see them become part of the AI trade. And so we saw them generate some headlines there, but there's utilities. These are 3 record highs in a row there. Also real estate. I don't talk about this one a lot, not at record highs, but kind of broke out of this base here. And it's just kind of emblematic of a bull market where you have sectors kind of take a backseat while others reassert. And that's what we've seen because tech, which has been leading this bull market since October of 2022, it took a backseat today. It was the only sector that closed in the red. So real estate is another one. And then consumer discretionary. And this is a little bit more flashy because we got Amazon in there, we got Tesla. And here we can see a little bit of an uptrend, but this was the highest since we've seen all the way back to March or so in there, February, March. And I wouldn't be surprised if we knocked on those record highs pretty quickly, but that depends on what Amazon and Tesla do. We can also see this in some of our leaders, and this board right here is just a collection of ETFs for the most part of markets I like to look at. And home builders. Home builders is a group I have not looked at in forever on this board right here, but you can see closing in, I don't know if those are the record highs down there. Let's put a 1-year chart on. There we go. And so we're at the highest since earlier in the year, and we've got some territory to reclaim here, but really interesting to see the home builders kind of perk up in this market. financials as well, because we are in the midst of earnings season, and we've seen some of those spillover effects. Here's TAN. This is a solar ETF, highest since what? We're probably going back to last November, and that's the Invesco Solar TAN ETF. And really interesting to see solar kind of reassert at times that are opposite the traditional energy trade. And then cannabis. Now, cannabis is not one of those high-flying sectors. This is. I'll show you a 6-year chart, and I'll show you why this has not been the greatest trade, down 94%.
Wow.
Nevertheless, keeping with the theme of the day here, it did break to the upside, and so that's what I'm looking at here. And I think I got one more. Oh, I said consumer discretionary before. Its cousin is XRT. This is more traditional bricks and mortar retail, but it also has some online stuff there, but more retail. You're not going to see the Amazon in this particular cohort, but nevertheless, look at that. If it's not the highest price in the year, it's touching it. So that's kind of the way the breakouts are shaking up today.
Outside of stocks, my friend, where are we seeing strength?
Metals. All right, we got to talk some metals and commodities. This has been an evolving story. I've been talking about this. I've done several segments throughout the days, the last few weeks on the metals complex. And that is because commodities are typically a release valve when you have economic factors, when the economy is kind of where it is, where the Fed is where it is right now. So let me just show you what gold has been doing today. By the way, gold, another record close. We haven't seen a record close in gold for some time. So here's year to date, and I'm going to show you the candlesticks there. It's been consolidating since April, finally broke to the upside today, just barely. Didn't get an intraday record, but we got a closing record. So gold futures definitely on my mind. 3,500, well, when you break out at 3,500, you're going to see a lot potentially of upside just because of the length of this consolidation. Also copper, things are getting more expensive to build with. This is another theme, and this is, the run up to the global financial crisis, commodities were a huge deal because they were exploding to the upside. And it wasn't just stuff you build with, it was the stuff you eat. And so food was in there too. But here's another record high for copper. And then silver, I'm gonna show you a longer term chart here. Let's get the max chart, I'll put some lines on it. And this is the highest since about 2012, somewhere in there. So that's a 13-year high for silver. So things definitely breaking to the upside there as well.
Should we do a quick check on crypto?
Yes, because I am talking, and dollars too. Stable coins backing dollars. I'm going to get back. I quoted Dimitri Kofinas of the Hidden Forces podcast yesterday, and we're going to listen to a clip of him. He was doing a Stocks and Translation interview. Yesterday, we were talking about the decentralized nature of the US dollar. You heard that correctly. And today, he's going to talk about stable coins. Let's take a listen.
That parallels the financialization of the U.S. economy because it also made it easier to generate outsized financial returns more quickly, and we certainly have seen that. I think that one of the silver linings with respect to what's going on in crypto right now, despite, again, the trends of financial nihilism that I talked to and its origin point in crypto, is what's going on with stablecoins. Because even though a lot of what's going on through the administration, the tariffs, and not as much the tariffs, but more, I think, the uncertainty around policymaking in this administration has been, I think, bearish for the dollar. I think that the adoption of stablecoins and the passing of legislation that is more amenable to their use cases is actually something that could be positive for the dollar.
So stable coins providing another use case for the dollar, just Kevin getting a little lift to the greenback.
Covered a lot of ground. Anything we missed quickly?
Rates, 30-year has dropped 10 basis points in the last 2 days. Love that. Want to continue to watch that tomorrow. The 30-year at 4.9%.
All right, thank you, buddy.
You bet.
Appreciate it. Stick around. Much more Ask for a Trend still to come. All right, the annual WNBA All-Star game was held in Indianapolis, but off the court, discussions about pay equity as collective bargaining agreement negotiations continue between players and the women's teams and WNBA owners. For more, let's bring in now Yahoo Finance sports report host Joe Pompliano. Joe, it is great to see you. So the story here, the collective bargaining negotiations, players wearing these T-shirts. Joe, you saw pay us what you owe us. Certainly got a lot of attention, a lot of headlines. What did you make of it, Joe?
Yeah, this has really been an ongoing debate with the WNBA's Players Association and the league itself. The WNBA players opted out of their CBA a few months ago, and now it's up for renewal by August, or actually October. So they're negotiating that during the middle of this All-Star weekend. They decided to wear these shirts, essentially giving a little bit of pressure to the negotiations during this time. Now, this is a little bit more complicated than people realize because on one side of the equation, WNBA players absolutely deserve a raise. I mean, there's no reason why someone like Caitlin Clark should be making $75,000 a year. She's worth hundreds of millions of dollars, if not $1 billion or more, to the WNBA. Franchise valuations have grown, attendance is up, viewership is up, and they just signed a new $2 billion media rights package, which is going to be 4 times more in annual payments than the previous one. So we get that. The part that makes it a little bit more challenging is the WNBA players want 50% of the revenue, which is more similar to what we see in the NBA, NFL, et cetera. Right now, they get about 9%. So there's a huge gap there. The reason why there's such a big gap is because the WNBA has historically operated at a loss. In fact, the league has never made a profit in nearly 30 years of existence. To continue to fund itself during that period of time, the other NBA owners, the NBA itself, and outside investors have given the WNBA money. As a result, the WNBA only owns about 42% of its business itself. The NBA and its owners own about 42% as well. And an outside investor group that raised $75 million in 2022 owns the remaining 16%. So we're not looking at a total pie here that they can just divvy up down the middle 50%. There's a lot of money coming in, but it also has to get spread out, which makes it more challenging to give WNBA players what they want.
So, Joe, how do these differences then get bridged?
My guess is we're going to see substantial salary increases. Some of the players have asked for $1 million a year salaries. I don't think we're going to get there, but we're at around 250, 300 now. We'll probably get north of 500, maybe 600 in max salary contracts, which is a big jump. And in the next CBA, it'll continue to go higher if the league does well. But to bridge that financial gap, I think the WNBA is going to have to get creative and give some other concessions. One thing that I think most people don't realize is when the WNBA introduced chartered flights a few years ago, when Caitlin Clark arrived in the WNBA, that was only a temporary program. So WNBA players have been flying on chartered flights for every single game over the last 2 years. But that program is set to end at the expiration of the CBA. So if players want that to continue, it has to be codified into the new CBA, which is obviously a big ask too, considering that program accelerated the WNBA's losses to $40 or $50 million last year. That's one thing. They're also asking for a whole host of other things. They want the All-Star break to be longer. They want extended schedules so they don't have to play as many back-to-back games. They want parental leave. They want other health benefits and other things like that. So I think the WNBA is going to get creative and give them some of those things, which are not necessarily as big of a deal financially as an increase in salaries.
Do you think, Joe, bottom line, place your bet, you think we get a deal, or do you think there is some high probability here of a lockout?
Yeah, I think a lockout is still under a 50% chance at this point. I mean, look, the WNBA players seem set in what they want, which is their right. They have a union for a reason. They're able to negotiate, and they should be set in that. But at the end of the day, these players, a lot of them still travel overseas during the offseason to make more income. They just don't get paid enough money to be able to sit out an entire year or so of work. When you're the union rep, you're negotiating for all of the players, not just the Caitlin Clarks who have $25, $30 million in endorsements. You're negotiating for everyone. And I think ultimately what we're going to find is that the WNBA Players Association isn't going to be able to actually do a lockout because most of the players are going to say, no, we actually want to play. And that's really tough in a negotiation standpoint.
Joe, always great to see you. Thanks for hopping on.
Thanks, Josh.
Time now for what to watch Wednesday, July 23rd. Starting off on the earnings front, huge day of earnings with some heavy hitters on deck Wednesday, including Alphabet and Tesla. Taking a look at Alphabet, the Google parent company, reporting second quarter earnings after the markets close. Investors keeping a close eye on AI investments that may push up the company's capital expenditures. Ad prices and the cloud business also in focus for Alphabet, with analysts anticipating Google Cloud to grow around 27% in the quarter. Shifting gears to Tesla, Tesla also announced the results for the second quarter after the closing bell. Analysts expecting Elon Musk's company to meet estimates for Q2. That's driven by stronger sales of the updated Model Y, but the recent rollback of EV tax credits under President Trump's big beautiful bill could pose challenges for Tesla going forward. And closing in on the housing market, we're going to be getting existing home sales data on Wednesday. Economists forecast that number to fall slightly in June to an annualized pace of 4 million, meaning fewer previously owned homes were sold in June compared to May. Well, that's a wrap on today's Ask for a Trend. And be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wealth. Have a great night.